Q3 GDP shows the economy is doing more than fine. We were supposed to get the initial release for Q3 gross domestic product, also known as GDP, October 30th, and then a second estimate November 26th. But with the government shutdown, it delayed the release until this last week. While it is old data, it does show the economy has been growing at a nice pace this year. Overall, GDP grew at 4.3% in Q3, which was well above the estimate of 3.2%. Consumer spending, which drives about 70% of our economy, grew very nicely in the quarter at 3.5%. Goods spending rose 3.1% in the quarter, while services spending saw an impressive increase of 3.7%. And this is important considering the fact that services make up about 2/3 of consumer spending. This nice increase in spending contributed 2.39% to the headline growth. Private investment in the quarter was subdued as it did subtract 0.02% from the headline number. The volatile change in private inventories category was the main reason for that, as it subtracted 0.22% from the headline number. Following last month's reading where private inventories subtracted 3.44% from the headline number, I wouldn't be surprised to see this category benefit the GDP report in Q4. Trade was actually a nice benefit in the quarter as it appears companies are still working through excess inventory that was brought in earlier this year. Exports rose 8.8%, while imports fell 4.7%, and this contributed 1.59% to the headline GDP growth. I don't believe trade will be as beneficial to the headline GDP number in future quarters, though. Government, well, that was a small contribution and only added 0.39% to the headline number. While this report shows the economy and consumer has remained resilient, the concern is, does it have an impact on future Fed rate cuts? Given where we are, I just don't see the need for much accommodation from the Federal Reserve in 2026. But again, we'll stay on top of things and keep you informed as the year progresses. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give a like or comment. And also, too, feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.